开始了。Hello, hello, hello. Welcome to the stream. Let me know if you guys can hear me, yeah? I'm gonna have to do this check every single time because there's no way I have any idea in terms of... Yep, sound. Cool. Alright, so welcome. I'm going to start immediately. So as you can see, I haven't even cleared my charts, haven't looked at the charts. So we'll be looking at it with you guys first thing. So welcome to the stream. I think we have a couple viewers now. Let's get stuck in. Right, so monthly, you know, how many days do we have left of the monthly? We have 4 days, right? So you have Tuesday, Wednesday, Thursday, Friday until the end of the month. So 4 days until this monthly closure. What is going to happen? Is it going to respect, you know, these ranges around 18 to 1907? If it does that, you know, potentially we're looking for price to drive up, retest the highs after a bottom wick. If it closes bearish, quite bearish, you know, below these ranges, we could be looking for the next monthly candle to drive up, create that top wick for previous monthly or for August, right? And then start coming down. So that's just the monthly. Obviously, we'll wait until this kind of closes in 5 days before having any sort of ideas about that, but that's just what can happen at any given point, right? This monthly, if there's news or whatever, could start driving back up, creating this this top wick for the previous monthly, and then it can make a decision on where it wants to go. Weekly, right? Weekly, we're still in the current weekly candle. We closed bullish, respecting around 1931, 1932 areas. So at any given point, we could create a top wick steeper than this one around these areas, right? Around 1950, 1960 areas to start driving down. This top wick on the weekly is not really a top wick. So at any given point, price could come down, grab liquidity, flip up to grab liquidity to come back down. So that's just a weekly. And if you look at a couple weeks ago, we closed respecting this support, right? So we established a support around these areas, 1918 areas, right? You had some level of support here, some support here, and some support here. So what happened the last time price did that? It came down and grabbed liquidity at around these areas, around 1983. And this is what the weekly is currently doing, right? We're coming down. We're bearish at the moment, probably for the daily and the 4 hour as well. So in that case, we'll be looking for buys in terms of the weekly candles. This could, you know, happen next week or whatever, but you could be looking for these these buys at around these areas to retest the highs. And this might not happen during this week's candle, right? This week's candle could, you know, push down, and then stay down, but then you could have another fake out to come back up. So it's just, if price taps 1981, 1983 levels, we're looking for some level of rejection. It won't be, you know, all the way to we won't hold all the way to 1960, right? Because that's an insane amount of range there. But we'll probably take, you know, 10, 20, 30 pips and maybe have runners for about, you know, 80, 90 pips there. So that's the weekly. In general, I would say, you know, you're breaking these lows at the moment. If you break the previous weekly low, it'll come down, grab liquidity here, and we should be good to start flipping up, creating that weekly top wick. Daily, we closed with no bottom wick on the previous daily, and you know how we mentioned that it will definitely come down to create that wick for the previous daily candle, right? And that's exactly what it did. Right? Gold price yesterday closed bearish, breaking that support there, that minor support there, and now it's, you know, filling the range towards around 1913, because this is the range you're in, right? You're in a range from here to about, I would say, about here. So this is your daily range, and currently what price does is just fills ranges. It came down here, filled 1913, came back up, filled 26, now it's coming down, and it will tap 1913 again, right? It's just a matter of time. But what we're expecting is the daily to come down, the weekly to also come down, and the daily, you know, that could be in the next like 2, 3, 4 candles, right? So if that comes down all the way down to these areas, but it's still respecting, looking left around 1907 areas, right? Or potentially even respecting 1903 areas, we'll be looking for buys at 1893 areas to retest those highs. But obviously this will play out in a couple of days, and it won't really affect our day-to-day 10 pips or runners. So 4 hour, I would say we're always in a range, right? So we're in a range between, I would say this is pretty good, right? 28 and 1913. This is the range you're in. The previous 4 hour candle closed bearish, breaking these sorts of areas here, so you're likely to come down and fill this range, right? So this on the smaller time frame is also a range, and you just gotta look to fill it. And that's fine, like we're happy for it to fill. You could move your support up to around these areas, and you could say this was a fake out and to come back down, but regardless, you will fill this sort of range at around these areas. And looking left, I'm actually going to put this down here because it just makes more sense for it to be there. That's a lot stronger of a support. So as price does that, what are we expecting? Currently, price structure is still bearish. You didn't create a higher high, right? You created a slightly lower low. What is price going to do? It's either going to drive down from this point, and it's going to be a trickle drive, I would say, in terms of volume being quite low. Pre-Asian, Asian and London don't really have tons of volume like New York, so you might come down slowly. But if you do start getting those top wicks, right, on the 4 hour, on the 1 hour candles, you could start looking for sells to come down. You're pretty bearish here. And also looking at structure prior to what happened, looking left, and what last times we kind of drove from these areas, because this is where we came from, right? Driving down to these areas, it rejected once at 1916, which it rejected here, 1916, right? It also rejected, found a resistance at around 1928, which it found a resistance around 1928. Now it's just coming down. So we're looking to mirror either this side of the push, or potentially another rejection around these areas. This could be a fake out if it wants to come back up, but it's more likely, because we've tapped these areas, there's a high chance that price will just start driving down. So where can we start getting our sells, and where can we start getting our buys, right? Once you kind of broke these areas here, you're in a small range between, let's say, 18 and 13 here, and you'll see this on the hourly and 30-minute later. But in terms of getting that top wick to come down, last time price started driving, it drove and then it created a top wick, come down, and on the 4 hour you can't really see those top wicks, right? Because the candles are quite large and they take 4 hours to print. So we dropped down to the hourly, right? So what happened last time price drove around these areas, right? So we're closing, I would say, are you respecting anything? Overall, I would say you could be potentially respecting these sorts of areas here, right? So if I just put a line there, you have some level of rejections here. If we drop down, we can get this much clearer. So the overall resistance, I would say, is around here for 1912.9 sorts of areas. This resistance I'm going to put around here for 1914.3, and that's the resistance I believe we are respecting currently, right? We're respecting this. You could also, there's probably a 5-minute range that's about 10 pips around here, but we're respecting, right? We're respecting, we're not breaking down, but price is still showing bearish structure. So what are we looking for? We're looking for sells somewhere in these areas, right? We're looking for some sells in these areas, and we're looking for buys somewhere in these regions, right? Because we appreciate that if this is a lower low, price is likely to drive down. So if it creates a top wick respecting these areas, that's just a lower high. So we can get in at the lower high to retest the lower lows, and that would be our trade, and potentially even get runners down to 1893 sorts of areas. And if we're looking for buys, right, we're looking for it to push down, right, and then needing more liquidity to push, or even change in market structure. So buys can happen in two ways, right? So you can either trade this for a buy, this rejection at certain strong levels, right? Or you can be looking for a liquidity grab to come up, or you can be looking for a change of structure and the buys to go back up and retest those highs. So there's multiple buys you can get, there's multiple sells you can get. It's just about what market what the kind of current price is printing. And with these bearish closures, the 4 hour closing below just ever so slightly, I would say we're likely to come up and tap these sorts of areas around 1920. I would say so I'm looking left, looking at these areas, right? If I drop down, or actually if I go here first, what did price do after, it's driving down? We potentially could even only come up to here, right? Last time price really came down to here, we drove all the way up to grab liquidity here. We could be grabbing liquidity around these areas. So I would say your medium is around 1921, these sorts of areas here. So where the green line is approximately. If we drop down to the 1, we might be able to see it slightly clearer. Yeah, like look at this wick specifically, right? We're coming down. If we come back up to these sorts of areas, which is the top of this range, right? The range between, so look at this. You have some resistance here, you have some resistance here, some resistance here, some support here. So if price comes up, breaks all these highs, even though it's closing, lower and lower, comes up, breaks all these highs, top wick around here, I'll look for sells around here. Don't know how likely this will happen in terms of the overall volume that we have in Asian and London, but yeah, so I would say in the short term, with current market price being bearish, I'd be looking for sells around 1920. Notice that yesterday and the previous analysis that we've had, for the past 3 or 4 days, last week as well, we've only been looking for very higher time frame plays. That's because during New York we've had the push, right? We had the push, and then after that we've kind of consolidated at a specific area, and then to look for another buy or sell immediately there without any market structure is difficult, which is why we're playing those larger ranges on the 4 hour. But now that price has done this push, it's consolidating in these areas, we can look for more like short-term or like more immediate trades. And you can notice that this is only 40 pips away, whereas yesterday we were looking for sells around 32, 31, right? And we were, more maybe like 60, 70 pips away. So yeah, so I would say in terms of positions, I would be looking for sells around these areas. All right, so we appreciate that we've broken into this range now, potentially even below here, right? This is the kind of range we're in. So if price wants to continue bearish, right, it needs to grab liquidity to continue down, because if it's consolidating here and it's not pushing, it means there's not enough volume, right? There's not enough liquidity to drive price in the direction it needs to go. So if we just, I'm going to zoom in a little bit to get a more exact idea of what price is doing. All right, so if I put a level here on the 1 hour, you can say that price is, we're in this range now, 16 to potentially just below 16, right? So what happened last time price was bearish and started driving down below 16? So I'm looking at, these areas here, right? Like this is quite messy here, but, in general, price was closing and you had a bearish structure, you grabbed top wicks at certain areas. Price was pretty bearish, right? You didn't break below 12 yet, but you grabbed liquidity around 20, right? You grabbed liquidity around these areas to drive to about 13 and 12. Once you're there, right, price can reject, right? It can come up back to around 1916. But if it breaks, right, if it's breaking and it's showing bearish market structure again, I'll look for more sells at around 1916. But currently, I would say this area is pretty good in terms of sells. This I would also be interested in, but only a specific part of it, right? So obviously this is bullish, right? We haven't come down from 1928. We've only kind of rejected at these areas to grab liquidity to go up. So a push down currently in terms of price might not be a liquidity grab to go up, right? In the short term, we're not looking for a liquidity grab for price to go up immediately. We're looking for that in terms of the daily and the weekly, but in terms of the hourly, the 30-minute, that's not what we're looking for. So this is less of a reference point for me. And the only other reference point we have is kind of these areas, right? And the fact that price is in a range. So if it wants to come up, break that range and drive down, then we're looking for it to break the range above as well. So, hey Karen, how you doing? Notice that every time price is in a range and everything does this. So if we're bearish, we've come down, we fill the ranges, consolidating. Let's say we break here as well, right? And then we're just here. And we do this, right? If price wants to go down, clearly this is not enough liquidity. So either it will break into this range and then continue down, or you might see this being slightly higher, right? And it's very likely that price, once it's in this range on the 5 minute, the 30 minute, or whatever, it might, it will likely fill the range to drive down. So it will always fill ranges essentially, and it's very unlikely that you'll just see like this, right? So if it will break into that range, it will grab that liquidity. You're still printing bearish market structure because you haven't broken the previous higher low. So I'd be looking for the sells around here. And how does this look in terms of the charts now? We have a range between 1916 1913. If we're starting to range around here, this is our second range, right? I'd say, like looking left around these areas here. So if this is your range 1, this is your range 2. Let's try to mark that up. So you have range 1, and you have, this is your larger scale range 2, right? If you have your two ranges like this, then I'm looking for price to break structure, come up, grab this liquidity around the top of the range, 1920, to start driving back down, right? But if price just starts driving down, then obviously we won't be looking for 1920 anymore, right? We'll potentially be looking for buys, because if it's just trickling down and there's not enough liquidity for price to go anywhere, we could be looking for those rejections to come back up and retest like a lower high or something. So these sells are just the immediate sells if price starts pushing up. Noticing that price in terms of structure is like this right now, right? You've made a lower low, so potentially a lower high around these areas, and we might get pineapples slightly higher up at around potentially 26 sort of areas, 26, yeah, maybe 24 to 26 sort of areas. So those are the sells. Let's look at buys now, right? So if price wants to drive up, we always go back to the 4 hour and the daily to look at what price does. Last time price closed below these areas, right? I'm looking here, right? We closed below. We grab liquidity on these areas. We kind of, I would say, you maybe have liquidity to go down to tap 1913 areas. You probably do have enough, but because you had this massive fake out here as well. But in terms of enough liquidity to drive down to 1893, I don't think it's enough. And that's just because price is already struggling here. Once it taps 1913, you'll see some level of rejection, right? Once you reject, you're just creating a lower high to come down, create a lower low. So in terms of buys, I think it's difficult to get a buy at the moment. The best buys you could probably look for are probably around these sorts of areas, 1910, around these areas potentially, and you're looking specifically at these rejections. You're looking at this rejection here, these rejections here. So I would say if price just starts driving straight down, you might be able to look for buys between 1910, like these ranges here, I would say. So between 1910 and what's this, 1908 sort of areas. But if you come down to their structure will form, maybe around here actually, 1906 areas. If price does come down to those areas and it looks like it's breaking, 1912, 1913, we're looking for those top wicks anyways to come down, right? We're pretty bearish. But if you're looking for buys, I would almost wait for some structure to be printed similar to this, right? It's grabbed liquidity, it's breaking its previous highs to create higher highs, higher lows, and then we can be looking for buys on these candles here. But currently, in terms of buys, it'll be difficult. Let's see if we can find anything on the lower time frames. Just because price is quite bearish, I would say. If we delete like all of these and we just look at, well, I'll keep 1906 for now, but I would say if you're mirroring these sorts of pushes, you could potentially get buys at around 1908, which is what we just said just now, right? So if you get buys around here, you wouldn't be holding to come up and retest 28, right? You'd be holding to potentially retest max around 1912, so that's a 40 pip range that you'll be playing. and your stop loss would have to be at least here. Like, that's not even that safe. I'd probably put it down to here, right? And if you have an entry in 1908, that's a steep stop, right? That's 120. That's actually okay. That's pretty good, because that's your next level that you potentially will reject at, right? So your next level is potentially here, 1897, right? Just in terms of the 1 hour, if it's breaking through these ranges and it's already grabbed liquidity, if you're not in a sell and you're looking for buys, it's around these areas. It's likely to reject here because it's, you know, these areas have been support and resistance multiple times. So buys are more difficult, but if you start driving straight down and you have no top wicks for everything, for like the higher time frame candles, like the 4 hour or such and such, you could potentially get some buys around these areas, but you would be targeting small ranges. Just looking at the 4 hour and the daily, because this was basically, I would say, a fake out, right? You kind of came out, you came up, actually no, you respected, and your salary coming down to fill the range at around 1908, potentially down to 1897. So it's quite bearish, and if you look at overall structure in the daily, you still haven't broken those highs, right? You wicked up to these areas, but you didn't break in terms of a closure, so you're very bearish. So I wouldn't be surprised if it kind of just continues to drive down, with the monthly being quite bearish as well, and starts to fill these ranges down. Obviously, it'll take more time to print, but that's the overall thought process. I would say, yeah, I'll put for now maybe a buy at around 1905. But this is very dependent. A sell here, I would say, is I'm pretty confident in. Sells between 1920, or you might not even tap 90. You might tap around these areas. Between 1920 and 1921, I would say, are your sells, depending on what price does, right? But if you start, because if you want to break up as well, like if you start doing this, right? Worst case scenario, it continues to push up, right? But it'll need liquidity to go up, right? And I don't think this is even enough liquidity on the way back down. It will probably come down to these areas or retest the lows at around 1914 anyways, right? So what you're likely to see if price starts printing bullish and changing market structure is you're going to see this, right? You're going to see a break of these highs and this, right? And if these levels where it's tapping are these, then you potentially could be getting either the sell here to come down, or you could be getting this sell to come here to retest these lows, and you'll probably exit at about 40 pips there. I'm not expecting too many massive Asian moves, but I'm also conscious that for the latter part of New York, we did just start ranging, right? And with these ranges, like once you start breaking out of them, you could get some pretty decent moves. And Wix is on as well, so I reckon he'll be probably able to catch something tonight, even if it's like 10-20 pips. I say that like it's a bad thing. 10-20 pips is fantastic. I would take that any day. But yeah, I would say this is the general breakdown, and let's get into general questions now. And also, I think I'm going to try to, I keep delaying this because I don't have enough time, but I'm going to try to look at latency in terms of the stream being like 20 seconds delayed. I'll ask Don as well how to fix that, but yeah, I'm open to any questions now. If you guys are on the Signal voice chat, I'm on there as well. Feel free to ask me something and I'll try my best to answer that. Okay, let's look at the chat for some. Forming the zucchini to come up during Asian. Yeah, I mean, if you are forming, let's say price, starts, you're bearish at the moment in terms of 30 hourly and everything, right? So if you start coming down, right, and then you kind of fake out back into this range, and then you do something like this, right? This is on the higher time frame, it's just a wick, right? Then you've established a range 1 here, because on the 5 minute that's a range. On the 5 minute, this is a second range. So a breakout here, and then I would be entering at around these areas for zucchini to come up. But it would need to tap around 1914. before I'm able to do anything, like 1914.5, these sorts of areas. And you could potentially look for wick entries. These are slightly more dangerous. I would agree with those zucchinis going back up. But yeah. How much does the daily close matter here? Bearish, small to no bottom wick, but closed outside the previous range. So I'm actually starting to look at candles for not just candles and closures, right? We're looking for what it's tapping, because what it's tapping is very important. Like a candle closure. So for example, let's bring out paint. I fucking love paint, right? So let's say you have a candle which does this. How different is this candle compared to a candle that's like this, right? In terms of, if you're still in a range, right, these two candles are, I would say, pretty much the same. If you break down this candle, what happened in terms of price? Price did this, right? You started here, it's likely you created a high, came down, created a low, and you closed here, right? This candle, on the other hand, started here, created a high, low, and it's just here. So what's the difference between these two candles, right? These two are both candles, and if you were to say this is these hourly candles, and this is your first move for the 15, down, up, and you have like your separation there. But in terms of these two candles, this difference between this price and here is just, this is a higher lower high, right? You're still bearish, right? Your previous lower high is here. This is just a lower high. So if it starts driving down, or if it starts driving down from here, it's the same. Like price could do for this candle, it could start driving down immediately from here for a wick fill, right? There's a wick fill to come down. For this candle, price might come up first and then drive down. So you could see a similar area getting tapped, and if this is a range on the 5, you'll likely see it get tapped. It's just the 1 hour candle looks slightly different because the times don't align. Like say it's at this point, you know, it's a certain time, and it's like it's just essentially like it hasn't had enough time in that 1 hour candle to push up to these areas yet. But the next hour, the first 15 minutes of it, could push up and then come down. But in general, these two candles are very similar. I wouldn't say identical, because you could be respecting ranges at around these areas, right? If you're respecting this, then you could be looking for a wick to come down, break back up, and you could get some market structure changing there. But in general, we're looking at these being relatively similar, right? Because we're looking for wick entries. Wicks tap certain areas, which fill ranges, obviously. Ranges and like range 1, range 2. So once it taps these areas, we're looking for the buys, right? Because if we always look for closures, we might miss our entry. If we're looking at this and we're like, oh, we're looking for it to close below here, but it didn't. Well, shit. Then we're not in a trade. But realistically, price has already broken and it's already tapped those areas on the 5 minute or the 15, and it's just, you know, looking to either do a wick fill for this to come down, or it's looking to reverse, and we can catch buys or sells both ways there. Can I explain the zucchini? Yes, I can. So if you look at price in terms of like a higher time frame candle, right, you'll see a candle similar to this, right? So you might get something like this, right? What does this look like in terms of the 15? This can be multiple things. You can be creating this high, low, like this, right? You could also range in between these areas and then just kind of close here. But this is generally what price does. You close, you make a high, low, and then you close there. In terms of the zucchini, right? Because this is the 1 hour candle, if you drop this down to the 5 or anything, there's a range between here and here. So there's a range between these areas and these areas here. So within that range, right, you could get lots of different types of structures forming. But a zucchini is when you've established a range, right? So for example, you've come down, you've ranged here, right? And then you come down to here. Oh, cool, we're ranging here, right? And then once you're here, price could grab liquidity to come up, right? And then if it does that, we're looking for a higher high, a respect, potentially breaking back into these areas, and then to retest these highs, and you'll likely get this as well. So in terms of a zucchini, if this is a higher time frame chart, this range here, say this is 1 hour, right? These are two 1 hour candles. This would also be a wick, right? But on the 5 minute, this would be a range. So this is a range here. This is a second range here. So this would essentially be a range 2 breakout if you're looking at the playbook specifically. And if you're respecting, we could be looking for the zucchinis at potentially the break of the highs, or you could potentially look at it at the bottom wick there, just to kind of enter it earlier in a better position. But I would say that's the zucchini. It's likely that potentially if, let's say price does, let's keep that. Let's say price does this, right? Instead, it just ranges, comes down, ranges here, comes here, and then does this. We could be looking for a zucchini, a short-term zucchini, because it faked out here, right? This is a fake out, because it's closing back into this range, but this is still your range 1 and this is your range 2, right? So you're breaking back into range 2, respecting, and we're looking for it to fill the range, because once it breaks back into ranges, we're looking for it to fill, because that's just gold and its technicality, right? So there's multiple ways you can play it. I wouldn't say stick to zucchinis as like, oh yeah, you're looking for a breakout in a specific area and blah, 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 but understand what you're looking for in terms of what ranges you're playing, what trades you can hold, what trades you can kind of be looking for 10, 20 pips, or just, you know, the next advantage level and stuff like that. Does that make sense, GW? Okay, for the sells at 1924, 1926, we'd wait for the new 4 hour open and look for a dodgy or bearish closure. So I would say essentially this 4 hour has some level of bottom wick. Oh, sorry, this is a daily. Yeah, but the 4 hour also has some level of bottom wick, but it's respecting the general areas around 1914, right? So if you wanted to get sells, I would be looking for some level of bearish structure indicating that we're coming down, or it's respecting 1916 here on the hourly. So because you've created some level of range here, and you've created some level of range here, right? So if this candle closes bearish, bullish respecting, and the next candle is bearish, right, creating these lows and it forming that range 1, range 2, I'll look for some sells around here, just because then you have that structure. So this is what we just drew out, right? So you're here, do this, and you've come down, you've ranged here, you're respecting, and then we're looking for it to come down, right? So if it grabs liquidity here, cool, I'll get into sell to come down. And if the sells don't work out, right, let's say we get into a sell here. Worst case, if price and market structure reverses and it's starting to go up, it will grab liquidity before going up. So there's two guarantees here. There's one, that you can trade two, like you're in kind of two different concepts here. The first concept is you're trading the bearish market structure to create lower lows, right, after grabbing liquidity. And the second thing you could be trading is you're trading for a reversal of price, right, for price to start printing bullish, but you need liquidity, right? So you're either trading sells to come down, creating market structure, or you're trading buys, well, the buy structure and a liquidity grab before you can change direction. Does that make sense, Ragnar? Yeah, let me know. But yeah, I think it's looking pretty good. Like you've had multiple hourly closures below the range, indicating that you're going to range around these areas. You're going to tap 1913, 1912 sort of areas before making a decision on where a price wants to go. And if it continues to print bearish, we'll be looking to jump on the trend, right? Obviously, we don't want to be always trading against the bias because it's slightly more difficult. Yeah, exactly, Zay. Like trading with the bias is safer because in the short term, or depending on what chart you're reading, right? If you're reading the 1 minute charts and you're scalping the 1 minute, then it might be slightly more difficult because structure will change relatively quickly, like within 5 minutes, 10 minutes, or whatever. But if you're trading like the 4 hour pushes and like liquidity grabs and all of that, then if market structure is with you, then it's likely to create that structure, and if not, it's going to need liquidity before reversing in any direction. So yeah. Any other questions? If not, I will probably end it relatively soon. Thank you for everyone who has come. Yeah, and also let me know if you guys have any, like, you know, non just price action reading questions. It could be regarding like psychology, you know, it could be regarding other things as well. Time management is another key thing. There's a lot of things that need to play into trading, right? Trading is not just, oh yeah, once you know how to read price, cool, you're profitable, right? There's a lot of other factors in your life that need to align before you're able to become a profitable trader, and that's both mindset, you know, your physical health, mental health, and all of that. No more questions? I'll stay for another 4 minutes. If there's nothing, then we'll call it a day. But yeah, I appreciate. We have 22 viewers currently. It's pretty good. Does anybody in chat know how to reduce latency? I'm looking to potentially, because I think currently the delay on the stream is about 20 seconds. But I want it to be like Don level, right? Like where, and I think I have enough spec on my computer to do it. It's just what the settings are. I want it to be dropped down to like 5 or 6 seconds max. Could I explain the motion? I can certainly explain the motion. So let's look on the 4 hour. 4 hour is lovely for the motion every single time. So, right. So in general, right, you have market structure being printing, you know, bearish or bullish or whatever, right? And what you're used to in terms of market structure is it creates ranges, breaks, respects. You know, you have lower highs if it's bearish, and then lower lows, lower highs, lower lows, and whatnot. And then you have these kind of levels that you're playing with, right? So this is bearish market structure. So let's just talk about this, and you can reverse this if you'd like. Yeah. So what we realized is a lot of times you can get faked out, right? If you're in a trade and you see, oh shit, you know, prices breaking these ranges here. What's happening? Shit, is it going to start going up? It might be, right? But if it needs to do that, like it needs to, you know, create that higher high around these areas before it's fully confirmed. So if you have a fake out and you know you're even closing above here, what does this mean, right? This could mean a break of structure if you don't break these lows and you start, you know, creating these lower, higher lows and start breaking up. But what we noticed is a lot of the times price will fake you out. So if you were taking buys, range 2 breakout buys here, right? Because this is your range 1, range 2, taking range 2 breakout buys around these areas here, there's a high chance that price will start reversing on you. And that's because of two things. One is because the overall structure is bearish here. Two is because if price wants to go in any direction, say you take a buy here, it will need to create and establish a higher low before being able to drive, because that's just a change in market structure, right? If price starts doing this, then cool, we've confirmed that we're not breaking these lows and we've created a new high. That's what confirms market structure being changed to bullish. So because of that, we started thinking about, you know, okay, so these are fake outs. What do fake outs mean, right? A lot of the times fake outs don't just happen and kind of end here. Oh, sorry. A lot of the times when this happens, price at least comes down to here, but a lot of the times it also continues down, right? For example, if we look at these areas, let me find some bearish ones, some immediate bearish ones that are quite clear. Yeah, so I mean, just even this structure is in terms of the 4 hour. If we zoom in, right, and we're just looking at this structure on the 4 hour, you know, we've reversed in price here, so come down, lower low, lower high, lower low, lower high, lower low, but we're coming up, right? Oh shit, is market structure changing? Cool, it might be changing in the short term, right? the short term, this is a 4 hour candle, so short term for 4 hour might be like a couple days, but it might be, but it hasn't broken the overall high. And then you see this strong rejection here, right? And then you're just continuing the market structure again, coming down, you know, lower lows, lower highs, and everything. So if you were to get into a buy at these areas, cool, you would have made money as well, but you could also expect that, you know, price needs to create that higher low before coming up. So we would say this is more of a liquidity grab, like these areas as well. I would say specifically in this example, this would be a liquidity grab, right? Because you've come up here and you've just started to close back into the range and you started creating lower lows. Most recently, I would say actually buys are very good for like this on the 4 hour is a perfect example of liquidity. So price is bullish, right? Where we've come up, we've created higher highs, higher lows, and whatever. We've started to range in between, you know, this area to this area. I would say initially, price just broke all the lows, came down all the way to here. But you know, this is your range 1, right? You potentially had a range 2 here, all the way down to, you know, where you had the higher low here. So you broke back into these ranges. You also kind of came down, broke those lows as well, and then you started flipping in direction. You had another liquidity grab here, right? You broke the previous higher low to grab liquidity to come up, and this is just a fake out. And we're establishing, or we're understanding that a fake out often is a liquidity grab, right? So that's just what we started trading now, and it's been working relatively good, because we understand that, you know, if you think about price in terms of momentum, for it to go somewhere, it needs to kind of tap into certain areas before having enough momentum to drive. You will never see price just, you know, for example, if this is structured now, right, you'll never see price just do this, and then just start like down, and then like all the way down to like, you know, these areas. You will see price print like this, right? If it really wants to continue down, that's what it will print, and it will slowly come down, and you'll create those lower highs and lower lows. But at some point you will create and grab liquidity to come back down, and this is what we're trying to grab. Does that make sense, Kurt? Inside my YouTube live studio, just select low latency. Yeah, I'll have to explore that. But yeah, I think that's going to be yeah, Kurt, if you just give me, yeah, just let me know if that makes sense. If not, I'll be back tomorrow, and you can be back tomorrow to ask me even more questions about the motion. I'll be very happy to answer your questions. And let me just go back to my levels so you guys kind of understand. Oh, we drew a lot of shit. Yeah, so looking for sales around here, depending on, this is all dependent, right? Dependent on market structure, but currently I would say it's right. Amazing, Kurt. Right, so I'm gonna end the stream shortly, but thank you very much to everybody who's come. We had 23 viewers. We currently have 23 viewers, so it's amazing. Yeah, we'll be back tomorrow night at the same time. I'll have my stream set up so that you guys can be in the waiting room. I think we had like 8 people in the waiting room today, which is pretty sick. But yeah, amazing. Thank you very much for joining, guys, and I will see you guys tomorrow. If you're trading Asian with Wix, good luck. You know, obviously compare this analysis with his, because it's going to be different, and then compare that to your analysis. So yeah, enjoy Asian, and have a good night. Thank you very much.